Okay, hi guys. So this is question 2. This is an interesting question because we've done this sort of thing. It seems very common and very popular. So how I think you should do this is always ask for paper, in the exam. I mean, you can ask for paper, or you must need you need a worksheet, so make sure you request some. And just draw out the T accounts. That's really important, so you know exactly where things are going and where things are coming from. Don't try and start jumping to conclusions. No, don't do that. So let's draw out what we know, and then you have your, so you know that once upon a time you'd have had this asset that you're trying to get rid of. So that's cost, and that's accumulated depreciation, and that's, if you like, we can use this as the disposal account. We're going to fill this in. This is what you're trying to fill in. And I guess I can call this, I can make another one, if you like, depreciation, and I can call this bank. These are the account that we're discussing. So what are we saying here? We have an asset that we once had that we're going to get rid of. And we have this rule again. For all classes, always look for that rule. 4 years applied in the year of acquisition, not in the year of disposal. So you have this thing that you bought some time ago, 4,500. And you bought it on the 11th of June, 2004. So you're aware of what the year end is. You know, okay, I bought this thing on the 11th of June, 1106. So at least you're thinking, and write it out if you need time to do that. So you're thinking 11. Don't make a mistake. Don't fall for any traps. 2004. So you think, okay, so the 31st of March, 2005. That's 1 year. So the 31st of March, 2006. That's 2 years. So you know you had this thing for 2 years, because it says that when you dispose of it, there is no depreciation in the year of the disposal. So the year of disposal is the 31st of March, 2007, and there's no depreciation in this year. So we know that the first year we had this thing, we had depreciation of 1,500, because they tell us to do 3 years straight line, 1,500, and we had accumulated 1,500. This was year 1. This goes to the statement of profit and loss, and that's done for that year. Then you have the second year, 1,500, you have 1,500 again, and that goes to the statement of profit and loss. And that goes. So now it means that in the third year, when we now dispose of this thing, we have total accumulated depreciation of 3,000. And that's the answer to this very first question. Calculate the accumulated depreciation. Now let's dispose of this thing. And just use a different color. So we're disposing of this thing. So 4,500 has to come out of here and come to the disposal. 4,500. I mean, that's the cost, right? From the cost account. That's the 3,000 coming out of here into the accumulated depreciation, 3,000. So this thing is no longer in our statement of financial position. We're clean now. Nothing. It's gone. It's in disposal. Then they tell you, and I used to do this in a range of ways, if you remember. It tells us, I told you, these are just assets. This car we're disposing of is still an asset. We think it's worth 1,500. So someone says to us, listen, come along and buy your new asset. Your new asset, what they do here is they tell you, okay, pay 5,180 from the bank. So towards this new asset, you're paying 5,180. And they've also said, give us your old asset for 850. So 850 here, 850 here. So you can actually work out what the value is. 5,180 plus 850, which is 6,030. So we know the value of our new asset is 6,030. So they tell us, give us partly cash, give us the rest of your car. Well, this car, you thought it was worth 1,500. That someone's only willing to accept it for, if you like, a part exchange of 850, which means there's a loss. And that loss, if you like, is 650. That loss goes straight to the statement of profit and loss. I mean, I used to ask you to prepare kind of loss on sale of 650 and then transfer this statement of profit and loss. But this is just, if you like, a stop in between. So it's going to the statement of profit and loss anyway. So that's how you deal with this scenario. So your disposal account will have this statement of profit and loss. Of course, this is cost account, because this is going towards the cost, isn't it? Remember, the narratives are the reference points. The narratives are the reference points, and that's the cost. So you can now add this up, and you should have 4,500. 4,500. Yeah. And so let's look at the answer very quickly. Oops, sorry. So you can see here, that's the accumulated depreciation. That's the equipment at cost. that's the equipment accumulated depreciation, that's the equipment cost, that's the profit and loss, and you have those two figures there. It says here, calculate the purchase cost of the new equipment. You can see that was what I did. That was the 6030 that I got from adding these two guys together, right? That's how we arrive at that figure. So that's that. Okay, yeah, I'll stop the video there, and I think I'll do the next question in the next video.